joined now by an international trade consultant, Mr. Dele Ayemibo. Thank you, Mr. Dele, for joining us on Business Daily today.
Good morning. How are you today?
Doing very well, Mr. Dele. And how are you? How is Lagos today?
Lagos is fine.
Okay, thank you. You have seen, the responses from most Nigerians regarding the trade reports that has been released by the National Bureau of Statistics, a trade surplus of 6.95 billion naira, showing, a volume increase of 33%. But let's hear from you now, looking with the lens of a trade expert. Would you say this is sustainable, especially because we have seen, this happen for, I believe, 2 consecutive quarters now? So what are your thoughts on this development? And do you believe it is sustainable in the coming quarters?
The reason why I will not say it's sustainable is it is important we understand the dynamics of Nigerian trade, particularly on the export. We tend to have increase Q4, Q1, Q2, and a decline Q3, Q4. So the increase we're seeing, I think, is just based on the trend, because I'm not seeing clearly yet effort being made by the government to be able to drive it. This is not, it's not as a result of any serious policy of the government to really drive up exports. It's just the trend, the way you would typically see it, based on the trend of trade of Nigeria. So in terms of saying if it's sustainable, of course, import is declining. Import is not as much as it used to be, even though we are still importing what we used to. I'm talking about generally in terms of volume. When you look at 2018-19, of course, COVID went down, and compared to now, we've seen a general decline. And I think the decline is not necessarily also because we are reducing import, but when you look at the fact that a number of importers are now using different methods to be able to do their importation, particularly as regard funding leaving Nigeria. A number of them have to now get funds from other parts of the world to be able to do the shipment into Nigeria. And that also explains the reason why some of the FDI and the Forex from other channels are not coming the way they should, because some importers are able to get people who will send the money to China, and then they find a way to sort out themselves in Naira in Nigeria. So I can't say I won't say it's sustainable yet, because I'm not seeing any policy yet that is really driving this and making these changes.
But I would like for us to touch on the factors that that contributed majorly to this surplus. Can you highlight on those factors?
Yes, there is increase in agri export. There is increase in manufacturing. There is increase in generally there is increase. Like I said, and I think based on trend, I'm still working on trend. If I see this consecutively growing through all the quarters, then we can say, okay, maybe government is doing something to make it to grow. But agri, apart from crude, of course, I'll focus more on non-oil. Crude generally still constituting their 90% that crude we normally do. But now, on the other side, manufacturing, export, solid mineral export, agri export, all of them contribute significantly to the growth of export, which help us to have the surplus.
Well, Dele Ayemibo there, attributing the surplus to a trend. Well, is that the case? We will, be monitoring in the next 2 quarters to see what really happens. But let's go on a short break. When we return, the conversation continues. Dele Ayemibo, who is an international trade consultant, is still with us. To stay. And you're still watching Business Daily, coming to you live on Trust TV. And just before the break, we started our conversation on the trade report released by the National Bureau of Statistics on Wednesday, where the NBS has revealed that Nigeria recorded a trade surplus of 6.95 trillion naira in the second quarter of 2024. And I still have my guest here with me in the person of Dele Ayemibo, who is an international trade consultant. Thank you again, Mr. Dele, for joining on the program today.
Thank you very much for having me.
I will like for us to touch on, our export performance. According to the report, there was a significant increase in export, particularly crude oil. And what comes to mind is, the efforts or the progress that we have made so far regarding, diversifying the Nigerian economy. This has been an ongoing conversation, but still we have, the numbers telling us that still Nigeria majorly, exported crude oil. But I'd like for you to speak regarding that, how we can diversify our economy away from crude oil and, increase on our export base and, of course, reduce our reliance on crude oil. What will your thoughts on that be?
There are quite a number of policy changes that I think the government needs to put in place if we are going to be able to seriously diversify this economy. Export must be made very attractive such that businesses can invest more in the productive sector of the economy to be able to consider export. I mean, AFCFTA is supposed to do this for us, but even the way it is right now, I don't think we'll be able to do much with AFCFTA because of the fact that we are not moving fast as much as we should. And I think the leadership, I'm talking about now at the level of the presidency, need to do much more to support the like of Nigerian Export Promotion Council to be able to do what they need to do to grow the non-oil export space. So, for example, you notice that from this data revealed that crude oil is still the major foreign exchange earner. That means, about 90% actually. So diversification is not here yet. So non-oil is just about 10% of the total export in this particular period. And the reason why it is like that is because it has not grown. If you check the previous quarter, it was actually 9.2. Now it's about 10%. So it's always oscillating between 8-9% to about 10-15%. And the reason is because the non-oil export volume is not growing at the way it should. We need to increase non-oil export. And one of the sectors that we really need to do a lot about is the agric. And not to export raw agric, but rather to export value-added agric. That means agric plus the manufacturing sector. These are the two sectors I think the government needs to do a lot in. Maybe we'll be talking about some of the things government is supposed to do in those areas later on. But those are the two areas. We need to increase the volume of production of agric. And then, of course, we need to add a lot of value to it. And that's exporting value-added manufactured goods.
Well said. But we also did see, a drop in importation, which declined by about 10.71%. What would you say were the contributing factors to that? And what message does that really pass?
The challenge of FX. I think the challenge of FX is the reason why, as an importer, you can't keep increasing your price. You increase your price to a level. If your item is not something that is essential that people must buy, they will drop it and look for alternative. I think that's contributing to the import. So because of the fact that, the demand is dropping, because the item is becoming more expensive and people are not buying as much as they should. So the importer also is not going to be importing the way it used to import. So I think that's what is really driving. It's not because we are doing import substitution significantly. Although if what Dangote is doing is anything to go by, I hope we are able to support, because some of the challenges it's facing really is not good for our country. I heard Kenya is telling them now they will be buying their PMS. If Dangote get the next support it require and we're able to do that substitution, which is the whole idea of building that factory, then we might be able to say, okay, we are really now seeing a serious decline, because PMS is still contributing about 25%, 26%, at the last one about 26%, PMS alone. So if we can drop that, then we can say, yes, there is we can see the reason why there is a serious drop in the demand for in the import into the country, because of course we are now producing and using the PMS produced locally.
And still on imports, China emerged again, as one of Nigeria's major trade partners, or the topmost rather trade partner between Nigeria and China, which contributed about 24.29% of imports. That is huge in my opinion. But let us hear from you now. what are the potential risks of such, heavy reliance on this one partner? If you look back at the reports that we've gotten in the previous quarter, it has been China, emerging as Nigeria's major trade partner. But is there a heavy reliance on China at this point by Nigeria?
That's a very good question. The concentration risk on China. And by the way, it's not just Nigeria that have that concentration risk. Many countries in the world have that concentration risk, and that became very obvious to many during COVID. That's why now a number of businesses who produce in China, exporting to the world, are now moving to Southeast Asia, India, Southeast Asia, Thailand, Malaysia, and Indonesia, and the like, to be able to produce because of what happened, how China shut down, and it affected a lot of businesses across the world. So that is a number of companies are already doing something about that. We definitely do something about that. The question is, where are we going to go for the production that will be as efficient as China? That is the question that needs to be answered. India is trying to do a lot in that space, but they are not there yet. But definitely it's a concentration for Nigeria, and we definitely need to. In fact, for importers, there are some importers that majority of their product of import is from a company and a country, which is not good at all, because that means if that company is no more producing, or if that country have policy that is not favorable to the business being able to produce, then the company will now be forced to look somewhere else. So it's always good to have a backup such that you are not as import dependent on just one country, and in some cases one company, but having options to minimize the economic and political risk or sovereign risk that may happen, just like we have it during the pandemic caused by COVID.
Okay, we have identified our major import destination, but looking at the export destinations now, Spain, the United States, and France emerged as Nigeria's, largest export destination. And this came as a shock. These are the major countries that are exporting, made in Nigeria produce. But let's hear from you. What would you say is the contributing factor to that?
No, it shouldn't come as a shock. These are major export destinations, and majorly the crude. When you look at the value as provided by MBS, is mainly crude. And these are the people buying our crude. I think the shock there will be that maybe because pay is now on top, because typically you will see maybe India most of the time among the top. So you have for the export, you have Spain, you have United States, you have France. You can see India to be below, but these are countries. United States is always there, India is always there. Sometimes you even see UK on this list. These are major export destinations, and the major item of export to this country are pretty much crude oil.
But then again, how can Nigeria strengthen its trade relationships with not just these countries now, but new and emerging markets, even starting with countries around Nigeria, say across the West African bloc, and then across the continent, before even moving to countries in Europe and Asia? What are ways that Nigeria can strengthen its trade relationship with countries in Africa as well?
You have just touched on a very important area I think we need to look at very clearly, and that is AfCFTA. Now, in this report, like many other reports, Nigerian export was 94%, according to MBS, is to Cote d'Ivoire, South Africa, Togo, Namibia, and Ghana, 94%, which means our major export is still to West Africa, Ghana and Cote d'Ivoire, and Togo, and then Southern Africa, Namibia, and South Africa. That, for me, is not a good news. We need to begin to look at shipment to Central Africa, shipment to East Africa, and shipment to North Africa. Nigeria is not doing well in this region. So if we are going to be able to maximize AfCFTA, these are the region we need to begin to look at. If you look at that data also, you will notice that the export of Nigeria to Africa is still very small. And it has remained very, very small when you compare it to export to other parts of the world. It's always around the range of about 12%, 10%, 11%, 12%. In this case, it's 12.13%, and import is 4.14%. So we need to, because of the whole idea around AfCFTA, we definitely need to do something about increasing export in Africa under the African Continental African Agreement. So we must have a strategy. I know the National Action Committee is doing something on this, but we and of course, the good news also is that we have started the Guided Trade Initiative, but we definitely must increase, if we're going to benefit from AfCFTA, increase trade with Africa, maybe increasing it from the current 12% to about 20 or 30%.
But generally speaking, you have, touched on the African Free Trade Continental Agreement. It's been, I believe, 4 to 5 years since the ratification of that agreement by Nigeria. And only recently, that was this year, we saw the first shipment, under the agreement. But you looking now generally at Nigeria's performance under that agreement and comparing it with countries across, Eastern Africa and the SADC, that is the southern region of Africa now. What are, maybe tools or tips that we can replicate that countries across those other, blocks have put in place that Nigeria could replicate and which could, enhance trade within the region?
Okay, it's the same challenge we have with our trade generally. I'm talking about Nigeria now. For example, ensuring that we have getting partners to represent Nigerian exporters in major export markets that we are currently trading. So, for example, I've advocated that one of the things I think the government can do to be able to increase Nigerian export is to ensure that Nigerian ambassadors in different countries have a KPI. And their KPI is, just like the NEPC CEO says, double export. That's our mantra, double Nigerian export. For them to say, within the next 1 year, if you want to retain your position as Nigerian ambassador to that region, double your export. A number of these regions also, what they've done, I'm talking about the region like Sadiq, like you mentioned, is to also ensure that they build infrastructure to facilitate trade within those countries. We need rail, for example, to be able to, if we're going to go trade in Africa, in fact, we are already solving the problem of payment with Pan-African Payment Settlement System. What I'm not seeing a lot of effort in the direction, or at least I've not seen the result of every effort, if any, made in the direction, is logistics and movement of goods, which Southern Africa has been able to a large extent done with rail, which we have, and I think in East Africa, but we have not done it. I'm not even sure we even have any of that within the West Africa. We still largely depend on road within the West Africa, and movement by sea is so expensive. And of course, you have to go to Europe because you come to West Africa. So I think logistic problem is one area that really need to be looked into if we're going to be able to grow trade within the region.
Well said. You mentioning logistics, what comes to mind is, if there is some sort of technological advancement that could, ensure that logistics are easier and that supply chain distributions are, made easier. And what comes to mind are, the government agencies that are related with, trade and export, the Nigeria Customs Service, the Nigeria Ports Authority, and all of these, agencies that usually would, be involved in, export processes. I am aware that the Nigeria Customs Service has automated its process, the entire, export and import process, but I'm not so sure how, viable that has been so far. But let's still talk on logistics and the role that technology can play in, ensuring that supply chain is enhanced and not, and not made more difficult. What would your recommendations be, to improve Nigeria's trade infrastructure, particularly in the maritime and in the air transport sectors?
First of all, we need to build the infrastructure. We need to build infrastructure if we're going to improve trade within West Africa. But let me come back to Nigeria. That logistics is unfortunate. I know Nigeria, we have Nigerian shipping line. We need a shipping line that will traverse Nigeria to West Africa, to Central Africa, to Southern Africa, and probably Eastern Africa. If we don't, and this can be done maybe as ECOWAS with private sector. If this is not done sincerely, this is what I see as the major solution to be able to drive trade within West Africa, because currently it's largely done by road. air will be expensive, so I won't even recommend air at all. I think sea will be the way to go, and it must be a PPP arrangement which government have a stake so that the price can be moderated in a way that we can increase trade among ourselves. We can even start with West Africa and then move to Central Africa and then Southern Africa. That, I think, is something that the government really needs to do something serious about.
And when you talk of PPP arrangements, what sort of arrangements specifically are you referring to? You know, the role that the private sector can play in this. What would your suggestions be?
It should be private sector driven, but supported by government to reduce the cost. But government should not be the one driving it. Private sector is driving, so it's more like a private company, but with government having shareholding in it, such that government can support with funding and then be able to influence the policy to reduce the cost of shipment. Because if the cost of shipment is still high, even though it's owned by West African company or by government, it will still not serve the purpose. The reason why government is coming is government to be able to provide funding that will reduce the cost of running that business in a way that is still profitable to be able to make it sustainable.
Well said, Mr. Yemibo. But I'd like for us to touch on, you know, the trade imbalance. Looking at that report, you can see that it is quite clear that Nigeria's import value, you know, was significantly higher than our export value. And at this point, there should be, you know, conversations around, you know, creating a balance between both. But let's hear from you. At this point, it is beyond the responsibility of the government. I believe businesses should be involved. Nigerians generally should be involved. But let's hear, what are your recommendations towards, you know, creating a balance between Nigeria's trade import and export?
We want to have surplus. I mean, the way it is, we have a little surplus, it's still very small. We want to have more in terms talking about balance they talk about. But for countries that have done this, it must be policy driven. You know, the private sector will always act based on the policy of the government. For example, policy that increase the number of exporters in Nigeria. The number of exporters in Nigeria is low. If we're going to grow the volume of export, we need to increase the number of companies exporting. Number of companies importing in Nigeria is more than 30,000. Those exporting in Nigeria, according to NEPC, is less than 1,500 businesses. 1,500 businesses in a country that have millions of SMEs or MSMEs or businesses. So 1,500 is very, very small. So we must support initiative around growing the number of exporters. Number two, countries that have been able to do this very well also support in promotion, trade promotion. Trade promotion in such a way that we are able to significantly promote our businesses to be able to sell their product in the export market. Then, of course, purchasing power, talking about funding. Funding. Now, Nexim is providing funding. The process is very slow. They don't have export credit insurance to be able to insure export done from Nigeria, which will make Nigeria
Mr. Dele, if you can hear us, we seem to have lost your audio. Dele Ayemibo there, who is an international trade consultant. Okay, I believe he's back with us. Go on with your thoughts, please, Mr. Ayemibo.
Yes, so we need an export credit insurance, and this is from Nexim, an export credit agency, to be able to make, you notice something about Europeans. Even when war is going on in the country, they will still ship there. The trade must not stop. Business must not stop. Whatever they need to do to support the business, to keep trade going. In fact, in some cases, they would de-risk that country, work with IMF, World Bank, to guarantee sometimes trade finance instruments from those countries to de-risk those countries so that they can ship to those countries. Those are the kind of initiatives we expect to see from government. So it will be policy-driven and it has to be government support.
Well said. I mean, especially the part where you talked about some nations across Europe, for instance. What comes to mind is Ukraine specifically. We have seen, Ukraine continue with its export and import, despite the war, the ongoing war. But that goes to show, that Nigeria at this point needs to improve on its resilience to stay competitive across the global market. But what strategies should Nigeria, put in place? You've talked about policies and policy direction, but I'd like for you to be more specific, especially since you want to, follow closely policies around the trade sector in Nigeria. What specific areas should be addressed to enhance trade in Nigeria?
I have about 10 recommendations. About 10. Number one, policy towards preparing micro, small, and medium-scale enterprise to be able to go into export, preparing them for export.
Mr. Dele, your audio, we seem to have lost your audio again. I am not sure if you can hear me.
Now?
Yes, we can. Please go on. You were talking about micro, small, and medium enterprises preparedness towards exportation.
Yes. So full automation of the export process currently is partially automated, which is commendable, but we need to make it full automation such that I won't have to interface or follow up with agency of government. Number three, streamlining the paperwork. The last calculation I did, we have over 15 different documentation requirements. It's actually about 18 from Nigeria. We need to streamline the paperwork and make it to be fully automated now. Even though we have some of them automated, maybe about 5 or 6 of them, majority of them are still physical paper. Number one, reducing the number of documentation. Number two, automating that documentation. Policy towards boosting the purchasing power of the exporter to be able to do more volume, and boosting the purchasing power of the producers, manufacturers, and producers of raw material to be able to produce more. Policy towards improving the proficiency of the current exporter to be able to enter new market. Policy towards reducing the pricing and cost of exportation. Inflation is already very high. We need, which is where logistics come in, supporting reducing the cost of freighting goods out of Nigeria. Policy on reducing pricing. Policy towards boosting productive capacity of manufacturers in the country, so that at the end of the day, government introducing taxes, but giving incentive to manufacturers to be able to reduce the burden on them and boost their productive capacity. Body towards protection against export business risk. Like I mentioned earlier, export credit insurance, and the last one, policy towards getting partners to represent Nigerian exporter in major export markets around the world.
Very detailed and very long list of policy recommendations there by Mr. Dele Ayemibo. Thank you very much for, very, very, very insightful conversation. Mr. Dele is an international trade consultant. Thank you for, the very engaging discourse this morning on Business Daily.
Thank you for having me, and bye-bye.
Thank you. This is where we say our goodbyes on today's edition of the program Business Daily, coming to you live on Trust TV. But you can, continue the conversation across all our social media platforms, on Facebook, on YouTube, on Instagram, and of course on Twitter, or now called X. Keep the conversation going, and we'll be there to engage with you. My name is Chiamaka Inendo. Thank you for watching, and bye for now.